Welcome back to the channel. So we are going to be putting on a long position on MicroStrategy in this particular video. I'm also going to remind everybody in my very last video on my channel, which was this particular video here, live on video, we ended up putting a butterfly trade on MicroStrategy to bet towards the downside. And the trade worked for us perfectly. You could actually see in the screenshot here, in the thumbnail, MicroStrategy was trading at 106. And as we put that trade on, and as of today, as of now, it's trading at $85. And as we look at my brokerage account here, this is the butterfly that we basically had on. We sold the 110s, we bought the 102s, we sold the 80s. The overall realized P&L was $9,200. We made about 640% on this trade within 2 days. It worked super well, and we got out of this trade pretty much at market open today. And but that's in the past. Let's discuss the long trade that I put on, which you could actually see it right here. This is a ratio spread. And what we're doing here is we're selling the $80 calls, right? So we're short the $80 calls, and we're buying the $90 calls, which we are long 12 of them. Notice the ratio here is basically 1-3. So we are long many more contracts than we are short on this trade. I'm going to discuss why we are putting this trade on the way it is and the benefits of it. As you can see, it's basically trading at break even right now. I paid $7.53 for it. That's with commissions, by the way, and it's currently at $7.52. So I'm giving it to you guys basically as the trade is at its current price. Let me bring up the risk profile so we understand this trade a little bit better and why we're putting it on. So by the way, this was the butterfly that we had on, that we got out of in that particular video. I paid 96 cents for it. We got out, it was at like $7 and change. You can basically see the P&L was over here for us. I got out, I think, when it was about $83. MicroStrategy was $83. And, but okay, so let's toggle that away, back to the ratio. Okay, so it's today's date. Let's first look at this purple line, because this represents today's action. If price were to move today, what would the P&L look like, right? So we see that obviously if it goes up, we profit pretty well. If it goes down, obviously we lose money. If it sticks here to the end of the day, nothing really happens, okay? As we kind of push through, one thing you'll notice is this purple line starts to kind of start sloping lower and lower. July 3rd is what? July 3rd would actually be next Friday. So by next Friday, if price sits right here, if you look here in the bottom left corner, we would be down $1,200, let's say, if everything else is kept the same, in particular the volatility, IV in the option. So we wouldn't stand to lose that much if price does not do anything within this range, right? But if we stay in this position as time goes by, notice these are the July 17 expirations, as time goes by, then the losses begin to get very, very serious. If we find ourselves stuck in this $90 zone here, coming to day of expiration, pretty much as you could see here, the losses are way more severe. Okay, so what does that tell us right away? We do not want to wait till the very last couple days to decide on what we're doing with this trade. We want to manage it way before, right? Something like July 9. Well, what does July 9 put us at, right? Almost 2 weeks from now. Maybe I give it an extra day. We definitely want to be doing something with this trade. Now, with this trade is not put on with the expectation that price will do nothing. We obviously expect some sort of rubber band effect. MicroStrategy can go two ways here. Let's look at the daily chart here. Either we keep collapsing and we go down to 60, we go down to 50, 40, and so on. In which case, okay, we budgeted for that loss, okay? I'm okay with that loss because I sized myself for that loss. If I'm wrong on the thesis, there is no bounce back, okay, I'm out $3,000. As you can see, it doesn't even matter like when it happens. Well, yeah, if it drops down to like 78 today, you could see that it's not a full loss, but you get the point, right? Now, if there's a rubber band effect, right, and it ends up ricocheting back up, which, I mean, even Bitcoin, you could see has been, has been down quite a bit. Again, we're not looking for a full recovery here. I'm not looking to bottom fish and say that this is the bottom for MicroStrategy for the rest of the year. I'm not saying any of that. I'm just trying to catch a bounce in the stock, right? And I'm doing it and I'm setting up in such a way that I'm limiting my downside much more, because if I were long these 12 contracts, like just think about this. If we go here and we just go long these $90 calls, right? Oops. Let's just analyze by, let's put 12 of them. So this is how it actually looks like. Okay, our risk. So yes, either way, as the dates move forward, right, the purple line will move down more aggressively because of the theta burn, right? This is a typical chart for a naked option here. If price were to go up to 100, we'd be up about $10,000. If we look at the back ratio, if we're up to $100, we'd be up about $6,000 on it. So clearly, there is a reduction in how much we can make, right? But if at the same time the stock were to dump to 60 today, would be down $3,000 here, and then here we would be down over $7,000, right? You see the difference there, where our losses are double of that, and our gains are still more than half of it, right? So we're still capturing more. We're capturing more of half that upside while having less than half that downside. And on top of that, if price stays the same, we would lose less from the theta burn, okay? But again, we do have to manage it. Ultimately, the best way to look at it is that we're using the short leg, the $80 leg, to give us more time for the trade to work out. Since obviously there's gonna be a lot of theta burn there. So we do not have to have this thing work immediately as you would want to, being naked a call, right? We're giving us pretty much a week of minimizing our losses on the trade if things do not go anywhere anytime soon, by selling those calls that are in the money. If you have any questions for me, even as we talk right now, MicroStrategy is actually heading back lower. So some of you guys, I mean, if you were to follow this trade, obviously no financial advice, you'd get in at a better price than I would, than I did on my end. It is interesting to watch though that stretch is stabilizing better on the day right now. It's still near its highs of day. Granted, it's down on the day. Compared to MicroStrategy, which is currently dipping. It's still not a great sign. Let me say this much. It's not a great sign that Bitcoin is up on the day. Granted, it has fallen, but it's still up on the day, while MicroStrategy is back red. So maybe it hasn't shaken everybody out just yet out of this trade yet. We're gonna have to see in terms of like finding a current interim bottom. But either way, if you have any questions for me about this trade, in general, I'll keep you guys updated, probably in the comments once I'm out of this trade. Like this video, subscribe if you haven't, and thank you guys for watching.